Inflation. It's a word that may sound technical or even intimidating, but it doesn't have to be. For young professionals like you, inflation is more than just rising grocery prices or escalating rent. It's an economic reality that, with the right approach, can present unique financial opportunities. In this video, we're going to demystify inflation, show you how it works, and most importantly, guide you on leveraging it to your advantage. Let's dive into how you can not only survive inflation, but use it as a tool to thrive. Inflation, simply put, is the gradual increase in prices over time and the corresponding decrease in the value of money. For example, what $100 could buy you 5 years ago may buy far less today due to inflation. But why does inflation happen? Common causes include 1. Demand pull inflation. When demand for goods and services exceeds supply, prices rise. 2. Cost push inflation. When production costs, such as wages or raw materials, increase, businesses pass these costs to consumers. Inflation isn't inherently bad, it's a normal part of any growing economy. When managed correctly, it leads to economic expansion. However, unmanaged inflation can erode financial stability. For many, inflation is seen negatively because of its impact on purchasing power. Prices rise, but your salary may not. Savings in low-interest accounts lose value when inflation outpaces interest. Over time, without action, the money in your wallet buys less. But this doesn't have to mean you're powerless. By understanding inflation's dynamics, you can position yourself to leverage it for financial growth. Here's the key. While inflation erodes savings, it also creates opportunities for those who know how to act. Assets like stocks and real estate often grow faster than inflation, allowing wealth to accumulate despite rising prices. Understanding this opens the door to financial strategies that can help you thrive. Inflation makes one thing clear: holding only cash won't cut it. To shield yourself, consider investments that historically outpace inflation. Here are the top contenders. 1. Stocks. Over the long term, the stock market has been one of the most reliable ways to grow wealth above inflation rates. Companies often pass inflation costs to consumers, maintaining profitability. 2. Real estate. Property values tend to increase over time, often keeping pace with or beating inflation. Additionally, rental income is another way to benefit. 3. Inflation-indexed bonds. These bonds, like U.S. Treasury inflation-protected securities, TIPS, adjust their value based on inflation, making them a safer wealth preservation tool. By diversifying into these assets, you're setting yourself up for growth even when prices climb. Inflation doesn't just affect savings, it also impacts debt. Here's the good news. In an inflationary environment, certain types of debt can actually work in your favor. 1. Fixed-rate loans. Loans with set interest rates, like mortgages or student loans, cost less in real terms as inflation rises. For example, your $1,000 monthly mortgage feels smaller over time as salaries and prices increase. 2. Good debt versus bad debt. Focus on fixed-rate debt that's tied to appreciating assets, like a home. Avoid high-interest variable-rate debt, like credit cards, which can spiral out of control as rates rise. Used wisely, fixed-rate loans can be a powerful way to build wealth in the face of inflation. To truly thrive during inflation, consider supplementing your day job with income streams that are less affected by rising prices. Some ideas include passive income, investing in dividend-paying stocks or rental properties that generate income over time. Upskilling for career growth. Inflation often leads to higher wages for in-demand skills, so investing in your professional development could mean higher future earnings. By diversifying your income streams, you protect yourself from inflation's impact on any one source of earnings. Inflation tempts many people to adjust their spending habits, upgrading to a more expensive lifestyle as costs rise. This is called lifestyle inflation, and it can erode your financial stability over time. 1. Stick to a budget. Track your spending to ensure your expenses align with your financial goals. Use apps or tools to make this process easier. 2. Distinguish needs from wants. Prioritize essential spending and cut back on non-essentials, channeling the difference into investments. By controlling lifestyle inflation, you ensure a greater portion of your income works for you instead of disappearing on temporary pleasures. While investing is key, you'll also need accessible savings for emergencies. However, typical savings accounts lose value during inflation due to low interest rates. Here's how to counteract that. 1. High-yield savings accounts. These accounts offer better interest rates, helping you preserve some value. 2. Reevaluate emergency fund size. Inflation means higher costs, so adjust your emergency savings to cover at least 3 to 6 months of increased expenses. This ensures you remain financially secure without sacrificing long-term growth potential. No single asset class guarantees immunity against inflation. That's why diversification is crucial. A balanced portfolio might include stocks for growth, bonds for stability, real estate for tangible value, metals like gold as a hedge against economic uncertainty. By spreading your investments across asset types, you lower your risk of overexposure and maintain consistent growth. Inflation-adjusted investments aren't just about growth, they also involve smart tax management. Utilize tax-advantaged accounts like 401k and IRAs. Contributions to these retirement accounts reduce taxable income today while allowing tax-deferred growth. Roth accounts. Pay taxes upfront at today's rates, then withdraw inflation-adjusted earnings tax-free in the future. Minimizing your tax liabilities ensures more of your inflation-beating returns stay in your pocket. It's common to view cash as safe. However, in times of inflation, excess cash loses value quickly. While it's crucial to have an emergency fund, surplus cash should be redirected toward investments that grow over time. Inflation doesn't just affect today's expenses, it also impacts long-term goals, like buying a home or retiring. Start planning now. 1. Retirement savings. Contribute regularly to inflation-adjusted retirement accounts. 2. Real estate timing. Consider buying property sooner rather than later, as prices generally rise over time. By planning early, you lock in today's costs instead of paying tomorrow's higher prices. When dealing with inflation, avoid these common mistakes. 1. Relying solely on savings. Savings accounts rarely outpace inflation. 2. Over-leveraging debt. Avoid variable rate loans and high-interest credit cards. 3. Reacting emotionally. Panic buying large quantities or cashing out investments prematurely often backfires. Approach inflation with a clear plan, and you'll steer clear of costly errors. 1. Start small. Invest in a diversified, inflation-resistant portfolio. 2. Reevaluate your budget to account for rising costs and increase savings. 3. Explore passive income opportunities to strengthen your financial foundation. 4. Stay informed. Track inflation trends and adjust your strategies as needed. Inflation doesn't have to be the enemy. Yes, it can erode purchasing power, but it also creates opportunities to build and protect wealth. By understanding how inflation works and implementing simple strategies, like investing to outpace inflation, leveraging good debt, and budgeting wisely, you can stay ahead financially. The bottom line is that inflation is inevitable, but with the right mindset and actions, you can thrive even when costs rise. Start small, stay consistent, and build the financial future you deserve. Now it's your turn. Take one tip we've shared today and start applying it. Whether it's investing in stocks, cutting unnecessary expenses, or renegotiating better loan terms, get started and take charge of your financial journey. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.